Okay. Well, we'll go ahead and jump in. It's pretty close. Appreciate everybody joining us. This is a new thing we're going to do this year. We hope to do this every other week on a variety of topics. So anyway, we thought this would be a way to get some information out, put it up on our website, and then to interact with you all. So we really appreciate you taking the time to be here. Again, as I think we said, we are recording this to put up on our website and share information. Okay, let me advance to the next slide here. The agenda is, I added into this, we'll talk a little bit about the bonus depreciation phase out, new Texas franchise reporting rules, and this new federal reporting requirements. And so we'll just kind of zip through some of these. If you have questions as we go, you can put them in the chat, and then or please speak up. And, I love things that are interactive. My favorite thing is to be in an interactive audience where we can go back and forth. So if you have something to say it. There is a change this year on bonus depreciation. It's being phased out over the next few years. And some people have questions about bonus depreciation. I thought I would just take a minute in this. It's a complicated area. So let's just assume for a piece of equipment, if you buy a piece of equipment, you have some alternatives. One is to depreciate it over 7 years. The default is really to take this bonus depreciation, which is writing it all off. So if you buy a piece of machinery for $5,000, you can write it all off with bonus depreciation in 1 year. Well, that's up until this year because they've started these limits. You can elect out of the bonus depreciation if you want to depreciate something over the life of the asset according to the IRS rules. And again, it goes from 5 years for computers to almost 40 years for buildings. But anyway, I'm just talking about equipment. Quick introduction. If you elect out of bonus depreciation, you are electing out for a class. So you can't just pick and choose. Well, when I'm writing my tractor, which is 7 year off this year, but the implements I want to depreciate over 7. So when you elect out of bonus depreciation, you're electing out for a class of assets. And we try and work with our clients to do what's best, because sometimes you're robbing Peter to pay Paul if you write something off in 1 year. So there's no clear answer. Most people like kicking the can down the road with taxes. And so it's like, yeah, let's spend what we can. You also, though, have Section 179 expensing, and people are going to be paying more and more attention to this as these bonus limits phase. So that is basically, you can write off up to 100% of an asset under Section 179, and you can write off less. So you can pick a number. If you got a $100,000 piece of equipment you bought, and you're looking at your tax planning, you could decide to write off 25,000 of it and depreciate the balance over 7 years. So those are some of the options. The Section 179, though, what some people have not liked about it in the past, it's limited to net income. So you can't make your Section 179 expense force a loss in a business that might offset other income on your tax return. It can carry forward to future years. You don't lose that deduction. So if you have a profit next year, it would be used against it. But that's one of the things that people like so much about bonus depreciation. It could force a loss. So that's just a quick overview of the rules. And I just wanted people to be aware, so they're not shocked this year, that if you look over here, this year it's 80%. So if you bought something for 100,000, you can only expense 80 grand of it. 60 next year, 25, 26, and then it goes to nada. So if you have some questions about that, we could talk about that now or at the end. But that's just that's something I wanted to point out quickly to everybody, so you don't get some sort of a shock. It's like, oh, I thought I could write all of this off. Wanted to talk just really quickly about the Texas franchise tax changes. And again, when we get to the Q&A at the end, if you've got questions on depreciation or whatever, you can do that. You can email me, whatever. But Texas has long had a no tax due rule where it had gone to about $1.2 million. If you had less than $1.2 million in sales, you weren't going to owe franchise tax. But now they've increased that to 2.47 million. And so I've appreciated, I think what's happened here in Texas is that, my belief is, and I think others do, maybe there's some that can argue different ways, but lower tax rates seem to generate more revenue because it attracts business and it attracts investment and all those things. So it's kind of counterintuitive, but I think that that's a good thing that Texas has done here. And also to simplify this now, they used to have to file a no tax due report. You no longer have to file that if you're under this 2.47 million in revenue number. We do still have to file the public information report, which is what most people file, or this ownership information report for affiliated companies that are filing together. So I just some people don't understand what franchise tax is. I thought I'd just take a minute to explain it. Folks, Texas doesn't have state income tax. That sounds great, but they have this. So what is this? It's considered a privilege tax. It's the privilege of having a limited liability company. So who is susceptible to this is limited liability companies, corporations, any entity where you file with the state of Texas, even if you're a sole proprietor, but you're an LLC, you're subject to franchise tax. And you're also going to be subject to this new business federal thing too. So regular partnerships that do not file with the Secretary of State to form that partnership, you can do that. You could have a joint venture, which is in essence a partnership, and not have to pay franchise tax. But there's no limiting liability for a general partnership. The partners are liable. If you want to get into a limited partnership or whatever, then you file with the Secretary of State in Texas or wherever, and you become this entity that's recognized, and then liability can be limited. So that's the reason behind the franchise tax. It is a margin tax. Some people are shocked, have sticker shock. You can lose money and pay franchise tax because it is the difference between sales and another number. It's basically sales minus cost of goods sold. So those are direct expenses that go into generating revenue. When we prepare tax returns, we're careful to be aggressive. I don't mean wrong, but aggressive in finding what could be counted as a cost of goods sold if somebody's going to have this liability. It reduces franchise taxes. But Texas lets you pick the lowest calculation, revenue at 70%, revenue minus cost of goods sold, and revenue minus compensation. And then it's a calculation. And so you could pay, and what is the rate? I think it's 2.5%. I forgot. I think it's 2.5% then after that. So anyway, that's a nice thing. Less reporting requirements. This is the report, a portion of the report that will be required for everybody. The public information report is basically, where's your office? Who are the main directors and members, partners and owners and LLC members, et cetera, et cetera. Typically, a lot of times for the mailing address, we tend to use, this report is public. It's very easy to go to the Texas Comptroller's website, look for this stuff, find out who owns companies. So we're pretty careful. We usually will use the business address as the mailing address. It's not always necessary to put everybody's. Nowadays, I think everybody can find everybody if they want to. But anyway, this is public information that gets put out there. People have asked questions too about, I changed the makeup of my LLC. Do I have to report something with Texas? I have a new partner or a partner sold his or her interest. The answer is no. It just gets updated with this new report. Generally, that's the general answer. We're going to find that's very different though for this federal form coming up. So this is it. Beneficial ownership information report. And it's going to the U.S. Treasury, to their financial crimes enforcement network. And the reason is to catch financial thieves. And they're talking about the fact that, people use entities, separate entities, and they try and hide ownership. I guess we're all familiar with this. Layers of LLCs, who really owns this? And then they use it to launder money or or send money where they shouldn't, or bring money in from where they shouldn't. So that's the rationale behind this. The filing does have to be done on the Fine Send Center. This has long been around for people that through our software we can do that. Maybe our software will get to the point where we can do this through it, but we can't at this point. We can help file these, by the way. We're certainly prepared to do that. People that had overseas bank accounts with more than 10,000 bucks in them had to file and go online and file that information. So this has been around forever, but they've expanded now to use this for this new reporting. So who does this? It's all businesses formed with a state. So again, it's not a sole proprietorship. When I say all businesses, there are exceptions. We'll get to that in a minute, but it's all businesses. And generally for those listening, it's going to be LLCs, S corps, corporations, limited partnerships, professional LLCs, et cetera, et cetera. So if you filed a report, a certificate, you got a certificate formation back, you're supposed to file this report with the federal government. Now, what are we reporting? Well, we're going to report who owns more than 25%, and that's beneficial ownership. So that could be if it's you own it for the kids right now, and those with substantial control. And there's a long list of things they go into. What does that mean? Well, generally, in our smaller businesses, that's going to be owners and officers, probably directors. Now this is a one-time filing. It's a one-time filing. And then you have to file changes after that. So if your entity was formed before 2024, you have this entire year, you have to file by 12/31/25. But it is important that it's filed because you see at the bottom, civil penalties can be up to $500 a day. And then they have some criminal penalties too. And you can get jail time if you willfully don't do this. So it's not that hard to do, but anyway, if an entity is formed this year, you have 90 days. Entities formed after 2024, you'll have 30 days. Changes, I think the changes may be within 90 days this year, but I know for sure the changes are 30 days. I would just suggest if you're going to make a change, you have a new partner, you sold part of your partnership or whatever, just get on and update it and get it over with. It's just part of the paperwork that we have to do now. There are some exceptions I wanted to point out. I found this little blurb on their website or somebody's there. They think 32.6 million entities will have to file this year. I mean, that's a lot of paperwork, feeding the bureaucracy. Anyway, there are 23 exemptions or exceptions, if you will. I just went over a few that might apply to smaller businesses. Money service business, registered investment advisor, state licensed insurance producer, registered accounting firm. You know, we have to give fingerprints to the state, so they know who we are. Tax exempt entities do not have to do this, so we have some nonprofits, and then they consider a large operating company. To me, this seems counterintuitive because this day and time, it's actually kind of a small business. But if you got more than 20 employees with an office in the US and over 5 million in sales, you're exempt from this. And so I guess they figured out that most of the crimes they're chasing come from entities, and I don't know what the logic is there, but those are some exemptions that we have to doing this. This is what the form looks like. So I was just going to give you a quick what's going to go in here. This is from the online. Well, you can download this and you get online and enter this stuff. It's basically tax ID numbers from the reporting company, the state of formation, et cetera, address, some of those things. For the person who is doing the application, and on the people that are the beneficial owners or those with control, it's all pretty much the same. So you see it's first name, last name, date of birth, address. And here's the thing that's a little interesting, that they want either, a unexpired passport, driver's license, state issued ID. They want the number and they want you to upload a picture. So, some more information, and maybe someday they'll tie it together with the traveling abroad, and you won't even have to bring your passport, because you know how these entities talk to each other and how efficient our government is. Okay, that's it for me. I'm just trying to keep this kind of brief and just make sure everybody's aware of this. If anybody has any questions, please either chat something or feel free to yell out.
Hi, Steve. This is Joseph. Can you hear me?
Hey, Joseph. Nice to see a picture of yourself.
Yeah, I'm in the kitchen, so I think this is a better picture of me. But I first want to thank you. I think this is really great that you're putting these together, because it's going to be also a reminder for some of the responsibilities we have as business owners or tax filers, especially right now. And but I did have a couple of questions for the
Sure.
BOI. I understand this is a new requirement. Everybody's getting used to it. I'm glad to see that this is something that there's a link we can log in, we can actually fill it out. Is this something that we as the business owner should be doing, or should this be tasked out to like your office or another entity? Like, I know our corporate entity that does our taxes, I mean our filings, has offered to do it, but is this something we can do?
Well, it's kind of like everything. You guys are smart and you can figure out how to do it yourself. We will provide this service just like we provide the service of filing franchise tax reports and tax returns. I mean, you guys could do this yourself with TurboTax or get online and do it. So I think it's everybody can decide. You see the information provided. I mean, we can become the applicant. That means I would give my personal information, and but we would require from you this other. One thing we are going to do is set up a database. So, and we're going to bug everybody, and just and track. Hey, did you file this? If we don't do it for you, if you did it for yourself, we just want to make sure everybody's covered. And so we'll be setting that up. So that's kind of up to you, Joseph. One thing I did, I'm glad you asked that too, because that brought up, I even had this question. Hey, I have 4 or 5 LLCs, which I know you have several. Can I just file one blanket deal that'll cover it? And I found the answer in their Q&A. The answer is no. It was updated recently. You have to do this for each entity separately. So you'll have to go in and make this filing. You can't sort of consolidate in entities. So
And that makes sense, because there might be different ownership percentages or people in all of the other separate entities that one might employ. Has your office already established a fee structure for this service?
not really. We'll try and make it reasonable. It'd probably be like we've charged in the past for franchise taxes. I think we charge in, depending on, we were going from 150 to 250 depending on the difficulty there. So it might be something along the same lines.
Sounds good. The only other question, and there might be other questions from other people, but the other question I had is, I know that the depreciation has been slowly being phased out. I know that there's some talk in the legislation right now with some bipartisan committee where they're talking about, bringing it back. That would be exciting for us as business owners. Have you heard anything recently about that on a CPA level?
No, I haven't. I used to stay more plugged into all that stuff than I do now. And I have to be honest that I lost enthusiasm when so many things would fall through the cracks or get delayed. So when it gets close, I should have mentioned that, and I'm glad you did. There's probably a good likelihood. Everybody has to understand tax law has nothing to do with fairness or common sense. It's, what does the economy need? What does a certain sector need? Who's got strong lobbyists? It's all about the rules and closing this loophole and opening this one. So I wouldn't be surprised if some of this gets changed, Joseph, and the bonus stuff does come back, because I think it's been really popular. But, obviously, what it's meant to do is spur capital investment. Then people are spending more money on machinery and equipment and computers and vehicles or whatever, because they can write it off. So that helps the economy and helps people save taxes. So
Sounds good. Thank you, Steve.
And again, we will try and do, like I said, the idea is through this, we'll have more regular updates. And if you have some subjects, shoot me an email of something like, hey, I've always wondered about this. There are certain areas we get repetitive questions. And I might just from time to time do something that interests me, like how to deal with stress. And so I think about that a lot as we get into tax season. And when I figure it out, I'll let you know.
Sounds good. On that subject, I deal with stress very well by buying more real estate.
Attaboy.
Hey, Steve, it's Jason. I got a quick question.
Yeah. Hi, Jason.
Hey, back on the exclusions for the filing of that report. Can you go back to that slide? I think it was
Sure.
5 million in sales and 20 employees.
Yes.
So is this just an indicator that they're just trying to nab the little guys?
Yeah, I don't know. It struck me that as I read a couple of the pieces out there where they said, the whole purpose for this is to uh, trace money that's being stolen or large amounts of money that's being stolen. I thought, well, then, why is it these small things? So I can't answer that.
Okay, but is it 5 million in aggregate sales, or how are they looking at that?
No, those are by entity. You don't aggregate them. Mm-mm.
Okay.
No, nor
All
do
right.
you aggregate the employee counts. I went
Okay.
at it. They do have a pretty good Q&A on that website. It's pretty comprehensive.
Okay, cool. All right, cool. Thanks for this. Extremely helpful and very informative.
Thank you guys. Okay, well, I'm gonna wrap it up so that I can go heat. I call them evil burritos. You get them from the freezer section and you heat them in the microwave, and I eat it at my desk and work on a tax return. So I will just end this and say thank you all very much for being here, and really appreciate it.